So this song is special to me. It's about when I lost all my fucking money and started this band. Oh yeah? Numbers bleeding red, ticker tape is slitting wrists. Panic in the air like a margin call apocalypse. Leverage to the teeth, thought we print till kingdom come. Now the floor is giving out. Run, motherfucker, run! They built a house of cards and called it gold, but the hands that hold the strings just let it go. A million bag holders screaming, please just bounce. But the floor is lava now, we're headed straight down. We're going down. No brakes, no savior. Fed can't fix this question major. Grab your shovel, dig your grave, cause attendees turn to dust today. We're going down. Maxed out margin, lit the wick. Now I got my broker on my dick. Said hedge your bets, but I said nah. Now I'm knee deep in fucking margin calls. Took my rent, took my ride, took my future, took my pride. Now I'm staring at the screen like a junkie chasing dopamine. They built a house of cards and called it gold, but the hands that hold the strings just let it go. A million bag holders screaming, please just bounce. But the floor is lava now, we're headed straight down. We're going down. No brakes, no savior. Fed can't fix this question major. Grab your shovel, dig your grave, cause attendees stand to dust today. We're going down. We're going down. No brakes, no savior. Fed can't fix this question major. Grab your shovel, dig your grave, cause attendees turn to dust today. We're going down. We're going down. Down, down,
Oh, brother, oh, brother, oh, brother. Good morning, good morning, good morning, and happy November the 13th, I want to say. I believe it's a Thursday, and happy, I suppose happy Thursday to all the government employees who are working again. As of late last night, the government is officially reopened. President Trump did sign the bill into law to reopen the government after the House passed it, once again, after market close last night. The first reaction, pretty positive. If you were watching the market around, 10 p.m.-ish, we got a pretty nice pump. Right now in pre-market, though, we kind of gave it all back. And if you look at the S&P 500 and the NASDAQ, we are currently battling it out at the low from yesterday. So we're seeing a little bit of early morning weakness. But remember, this is just some pre-market stuff. Could get way worse. It also could get way better. It's basically, we have to wait about another 25 minutes to see what in the world is going on today. So I hope you guys are having a good one. I hope you had a great day yesterday. I hope you made a bunch of money, and I hope you are ready for a little bit of Thirsty Thursday action. So we're going to be breaking down all the news as it relates to the government reopening. We have some interesting news, though, related to a lot of the data. I don't know how many of you watched my conspiracy theory video yesterday, kind of how the government is being super, super shady right now, especially the Bureau of Labor Statistics, that it sounds like we're not going to be getting any of the macroeconomic data as it relates to the month of October. We're not getting the CPI. We're not getting We might be getting the PPI, oddly enough. We're not getting the jobs numbers. So that went from being positive of government reopening. And then we heard from Leavitt, the spokeswoman of the White House yesterday, basically saying, yeah, we're probably not going to get it. And the market was like, what in the world are you talking about? So we're going to be breaking that down. And obviously, if you want a more thorough discussion of it, I implore you to watch the update video from last night. And then we have some earnings to talk about, mainly Cisco and Disney. Then we're going to get into the core levels of the day. And we're also going to get into a little bit of a discussion about, I suppose, volatility and the current situation in terms of the market and the volatility, and really how everyone's just waiting for NVIDIA's earnings next week. So that's the plan. I hope that sounds good to you. If not, maybe I'll just get sidetracked and whatever I end up talking about, maybe you'll enjoy that a little bit more. But I appreciate you joining me here today, this morning at the crack of dawn. If you haven't already, don't forget to like and subscribe. All that type of engagement really does help get this video in front of other people who might want to be a part of the Goonie trading community. So like I said, like, subscribe, turn on those notifications, say hi to your favorite friend in chat. And with that being said, stock futures are a little changed after Dow rallies to record high. Well, I have a feeling that the intern was a little late to update that. Stock futures fall after Dow rallies to a record high. So the Dow, which I don't even know why we cite the Dow anymore. I guess it's just because of the old people in the market still. But anyway, no one really cares about the Dow, but yes, it did hit a new all-time high. However, with that being said, other things are looking pretty rough. The SPY opened up yesterday, puked. We bounced. We got into close. The market was stoked about the U.S. government reopening, and now we are currently vomiting. In fact, we're going to have, if we open right now, we're going to have a upside gap fill to consider on the S&P 500 and on the NASDAQ, because it looks like, we're still going down and down and down. It looks like we are going to be opening below the low from yesterday, which once again means we have an upside gap fill if we were to open right now. So both the SPY and the Qs showing some weakness. We actually have Bitcoin rebounding a little bit, hanging out at 102, not cracking 100, and the Russell is also having a rough go of it this morning. Trump signed spending deal ending longest shutdown in U.S. history. The legislation, which passed the House, extends funding for the federal government through January 30th. So obviously, I would consider it a good thing that the government is reopened, because there's a lot of people who their jobs, their benefits, travel. There's a whole gambit of things that why it's good that the government's reopened. But there is a chance that this just becomes an issue once again at the start of next calendar year, at a month in, January 30th. So please keep that in mind. Trump signs funding bill, ends government shutdown. President Donald Trump ended the longest U.S. government shutdown in history, signing a funding bill passed by both chambers of Congress. So Senate passed it first, went to the House approved it yesterday, and obviously right away the president signed it. The House shutdown vote was 222 members saying yay and 209 members saying nay. Federal workers were told to report back to their jobs today, Thursday. I don't know on the flying travel part of it how quickly we're going to spin back up, but hopefully, obviously, sooner rather than later. Record U.S. government shutdown ends as Trump signs a spending bill.
Today, we're sending a clear message that we will never give in to extortion, because that's what it was. They tried to extort, the Democrats tried to extort our country. In just a moment, I'll sign a bill exactly like we asked Democrats to send us all along, many days ago. This cost the country $1.5 trillion, this little excursion that they took us on. Republicans never wanted a shutdown and voted 15 times for a clean continuation of funding. There's never been a time when one or the other party ever didn't sign a continuation. It's just a continuation, not a big deal. It's a continuation, and we'll talk later. Yet the extremists in the other party insisted on creating the longest government shutdown in American history, and they did it purely for political reasons. I want to thank Speaker Mike Johnson, Senate Majority Leader John Thune, as well as House Majority Leader Steve Scalise, Majority Whip Tom Emmer, and numerous other great Republican leaders and congressmen and senators who are here, and who frankly spent a long time in Washington getting this thing to go away. I also want to thank the broad coalition of Americans that stood with us in this fight to reopen government, including the Teamsters, the American Federation of Government Employees, the Fraternal Order of Police, AMVETS, the National Small Business Association, the American Farm Bureau, the American Trucking Association. These are all incredible patriots. The Airlines for America, the Allied Pilots Association, the National Air Traffic Controllers Association, and many others, unions and non-unions. Over the past 7 weeks, the Democrats' shutdown has inflicted massive harm. They caused 20,000 flights to be canceled or delayed. They departed so many times, so late. People were hurt so badly. Nobody's ever seen anything like this one. This was a no-brainer. This was an easy extension. But they didn't want to do it the easy way. They had to do it the hard way. And they look very bad, the Democrats do. They deprived more than 1 million government workers from their paychecks and cut off food stamp benefits for millions and millions more Americans in need. They caused tens of thousands of federal contractors and small businesses to go unpaid, and the total effect of the damage their antics caused will take weeks and probably months to really calculate accurately, including the serious harm that they did to our economy and to people and to families. So I just want to tell the American people, you should not forget this when we come up to midterms and other things. Don't forget what they've done to our country. I also want to call for a termination to the filibuster so that this can never happen again. If we had the filibuster terminated, this would never happen again. And don't forget, we have another date coming up in the not too distant future. We can never let this happen again. And we should be able to pass great, really great legislation. So I say terminate the filibuster because, by the way, the Democrats will do it immediately if they ever assumed office, which hopefully they won't. It's an honor now to sign this incredible bill and get our country working again. Thank you.
Get our country working again. Couple things on this. First of all, larger situation. Does anyone find it a little bit strange that obviously we just had the longest U.S. government shutdown ever, and the Democrats ended up signing exactly what they were proposed first? As in, all of this hardship in a general sense, whether it's the economic impact, individuals not getting their benefits, people not getting paid in the interim, and everything else, everything that is negatively impacted due to a government shutdown, all of that was arguably kind of for nothing. Does no one else find that a little bit strange that we went from a government closure from the start of October to mid-November? So that's 3 pay cycles. It's 6 weeks. It's a month and a half of everyone saying what in the world is going on, and what is shown for it? Nothing. Like literally just nothing. So think about that. All the individual hardship, economic impact, struggle, like as a countrywide problem. And what is now shown for it? Nothing. Nada. Zilch. Goose egg. Isn't that just absolutely crazy? And then obviously we drill in here on this specific show to talk about the economy, finance, and the market. Well, we missed out on a lot of important data points. And when I say important, I mean, in terms of for the Fed, like what's going on with jobs, what's going on with inflation, where are we at? Very important decisions have to be made that not only impact our economy and all of our citizens and everyone in this country, but globally. Obviously, we know the dollar is the standard. So that's crazy that we're just missing that information. And this morning, maybe we were going to get initial jobless claims. Maybe we were going to get CPI, but the answer is no. We're not. And I'm going to show you this in a second, but there's a good chance that we're actually never even retroactively going to get those numbers. Right now, we might be getting PPI tomorrow. I'm hearing conflicting reports, so we'll come back to that. But you don't have to trust me on this. Like, this is what's being said, and this was said around 2 p.m. yesterday.
Shutdown could end up decreasing fourth quarter economic growth by 2 whole percentage points. The Democrat shutdown made it extraordinarily difficult for economists, investors, and policymakers at the Federal Reserve to receive critical government data. The Democrats may have permanently damaged the federal statistical system with October CPI and jobs reports likely never being released. And all of that economic data released will be permanently impaired, leaving our policymakers at the Fed flying blind at a critical period. Shutdown could
Now, I suppose there's two ways to look at this. You could look at this one way of, wow, we have just such an incompetent government system that we get to the point where the most impactful economy in the entire world is not getting data related to that economy. Yes, that's a fair argument. But months before this, we were all arguing that the data they're getting anyway, is it really even that accurate? So I think there's like two very distinct ways to look at it of, okay, does it even really matter? Because we all kind of know that the data is heavily skewed. So like, is it that big of a deal? But even looking past that, it's more of the sentiment of it of we're not some crazy banana republic. We're not some third world country where this government officials are clearly being puppeted, but it seems as if now we are. So I understand completely. Like, there's two very, very different ways to look at it, and I think they're both accurate. I'm not saying that this data was the end all be all anyway, but I am also in agreement with the fact that the sentiment of the situation is absolutely crazy. White House says October jobs and inflation data may never be released because of the shutdown. Key economic reports of October may not be released at all because of the government shutdown, according to not only the White House officials, but the spokeswoman. Release of important economic data has been on the forefront of Wall Street concerns as the shutdown dragged on for more than 6 weeks, the longest in history. The Democrat shutdown made it extraordinarily difficult for economists, investors, and policymakers at the Federal Reserve to receive critical government data. Once again, that's from Levitt, the spokesperson. Obviously, this is a little bit of political gamesmanship. Obviously, we have to blame the other side, and that's what they're going to do, because if this ends up leading to an overall economic hit and a stock market sell-off, well, that's the situation that the Republicans and the administrations are going to say, well, no, this is all exclusively caused from the Democrats because they cause, quote unquote, they cause it. I'm not saying I necessarily agree with it. I'm just going to be pitching to you what I think the narrative is going to be, where if there is a hit to the markets, if there is a hit to the economy, they're going to say, hey, they closed things down for 6 weeks. They got nothing for it. We just had an economic hit. So whatever happens here, this is their fault, making the job more difficult for monetary policy and everything in between. And it really does. I mean, it's already skewing the odds for the December FOMC meeting. And granted, we're about a month out right now. So from now until then, hopefully they do get good, clean cut data. But right now, it's adding a lot of uncertainty to this system. So even though on the surface level, them saying the government's reopening, great, your knee-jerk reaction, obviously, is that, oh, that's good, the market should go up. And that's exactly, in my opinion, why the market did go up at first. But as we're diving into it, we're starting to realize that something's going on underneath that maybe isn't 100% above board, which is why I believe this morning we're seeing a little bit of concern, a little bit of uncertainty, a little bit of bearishness. Now, does that mean we're going to fall off from here? No, obviously we have to wait for market open. We have to see what is really going on with the data flow. And if you ask me, it's just the battle of 6,800. If we're above this 6,800, I deem this to be a very key level. Maybe you can see it here. 6,800. The longer we stay above it, the better the chance for the bulls. The longer we stay below it, the better chance for the bears. In my mind, it's just that binary of a situation. So I do want to remind you, we're still technically in earnings season. Last night, we heard from Cisco. This morning, we heard from Disney. For the remainder of the week, there's probably not many names that you specifically care about. Cisco stock jumps on earnings beat, strong guidance, and a $1.3 billion in AI orders. So on the tech front, things were looking good. And Disney posted mixed results as streaming growth is offset by legacy TV declined. Excuse me, I had a lozenge in my throat, and I almost just choked on it for a second. But anyway, Disney right now in a big fight with Google, specifically YouTube, and it's Hulu Live versus TV or YouTube TV Live, and we're going to see how that plays out. But Disney right now posting mixed results. If you haven't already, sign up for the newsletter, MattKohrs.locals.com. It's in the description of the video. My mod will post it in chat. It is 100% free. You've never had to pay for it. You never will have to pay for it. This newsletter will come to your email inbox every single Sunday. I break down what's going on in the market. I give you a cheat sheet of earnings just so you have it all in one nice place. I try to highlight the ones that I think you're going to care about the most. I give you, well, ideally, this section's about to become more important because from here on out, the macroeconomic reports should actually be coming to us. But you should know today, that there's a 30-year bond auction at 1 p.m. this afternoon, so please pay attention to that. And for my day traders, scalp traders, this is probably the most useful section of the seasonality of each individual day, which brings us to today, Thursday, which is leaning bullish. So over the past 27 years worth of information, the better part of 3 decades, the bulls have won this day 57% of the time, so the bulls have a 7% edge. The profit factor is a nice 2.1, which means for every dollar spent in the bullish direction, it's actually returned $2, so great, doubling up. But if you look at the recent push, it's kind of neutral. So there was a bullish push about 2 decades ago, and then since then it's a little bit flat, which is why it's just leaning bullish and not straight up bullish. And then for those of you curious about tomorrow, it is completely neutral. Has been bullish, has been bearish, recently has been bullish, but I just want you to know that we are concluding the week on a little bit of a neutral period or neutral seasonality influence. So I want to throw that out to everyone. All right, bringing it back to this specifically as we have 10 minutes to go, these are my key levels on the day. Oops, I just already messed that up. As I always do, I mark out the previous high, low, and close. That is the green, the red, and the white horizontal lines. The white rectangle is the transition zone, bullish above, bearish below, choppy within. And then the final thing on your screen are the yellow horizontal lines, which are all the key levels of the day with relation to the options market, as in where we see big money at strikes on a 0 DTE perspective and potentially even for further out. But right here, I'm on the 0 DT. These are the largest gamma nodes, and it seems like right out of the gate, 6830 is going to be an important one. 6850 is going to be an important one. 6870. So the way it's really wrapping up is people clearly played yesterday's closing value, yesterday's high value, and yesterday's low value. So not only are these important technical pivot points, but the high, low, and close also happen to be very important option levels of the day. And we've been noticing this over the past couple months, that it seems as if every single day the market closes right upon market close around 4:15-ish. People are creating positions right at the extremes of the session that just ended, as in the high, the low, and the close. So very much watch these, not just from technical pivot points, but also it's where we're seeing the options market really align. On the outside of those bounds, obviously, watch 6,800, as I've been talking about in the Goonie Trading Discord. It's the battle of 6,800 to me. Above this, we are risk on. The bulls have a shot. Below it, that's where it gets a little bit more risk off, a little bit more questionable. So it seems as if we might be testing that today. We're at 6,825. Maybe we get down there. Maybe we don't. Your guess is as good as mine. We're right at this key level. We're just below yesterday's low value. Then there's support in this zone. So I'm looking for this region to hold and to bounce off of it. Obviously, that is the bull case. However, if we break below, we're talking 6,675, and below that, you have 6,750. The bull case would be that bounce, the recovery. We hit 50, the closing value, psychological level. We take out 60, and then we start to push 75. So I have the bull case, I have the bear case. My bias from a swing perspective is still bullish because we're above 6,800. Price is above all the EMAs. Momentum is still strong. We have strong price structure, higher highs and higher lows. But just because the swing perspective, the daily chart is bullish, that doesn't mean that individual day that you're paying attention to is going to be a bullish day, which is obviously why when the market opens, we're going to be paying attention to the options flow and see how people are handling the government reopening news right at market open. So that's kind of my plan. Right now, I would say the situation, at least the way I view the market, is maybe the best way I could explain it is cautiously bullish. So it's not the most absurd bullish situation we've ever seen, but I think it's appropriate to be cautiously bullish. And if we start to really battle it out at 6,800, maybe that's where you kind of almost shift your mindset back into neutral and saying, okay, I need to wait and see how this actually plays out. So that's how I view things overall. You have VIX elevating a little bit, but it's really not that high. You have gold seemingly maybe making a move to a new all-time high. Same thing with silver. Bitcoin saving itself at 100,000 and a little bit of change. Could be interesting if it takes out 105 again. However, it cracks 100, well, then is it going to go? So right now, there's a lot of things that are kind of in that awkward in between. I would say a lot of things are seemingly slightly bullish, but not evidently bullish. But we're also clearly not bearish. But we're seemingly on across the board, whether you're talking about crypto, commodities. Well, commodities are even stronger. But specifically crypto and equities, they're bullish, but it's like, are you losing it? So that's where really we just have to be patient and wait to see what the flow of the day is, and obviously be paying attention to our key levels. So that's kind of how I see the situation. Depending on where we do or don't open, there might be another upside gap fill. As of now, the SPY is slightly below the low value. The Qs are slightly below it, so watch that. Obviously, these red horizontal lines are the low value of the SPY and the Qs from yesterday. The Russell is also taking a hit. Bitcoin is looking somewhat decent this morning. If I go to the VIX is chilling at 18, so it seems like we're going to have a lot to watch. We'll throw Disney up there, which is currently down 5.4%. Remember, did not have good earnings. And then Cisco is CSCO, currently up 5%. So Disney getting hit, Cisco going up. These are the two most recent large companies, if you will, that reported. So that's pretty much the skinny on the situation. Before that bell goes dingity ding ding ding, I do want to shout out to today's stream sponsors, Bookback. Bookmap is right here. This is what I use for my day trading and my scalp trading. It's basically a very advanced DOM, D-O-M, depth of market. So to the right side of where this is active price of what's going on right now. You can see it better right here. If you have the heat map above these heat map, it just kind of shows you where there's more orders. If it's above, those are the sitting pending sell orders. And if it's below, these are the sitting pending buy orders. So down here, you have buy orders at 470 and you have sell orders at 500, and as it gets darker, that just means that there's more and more orders there. You're going to be able, if I scroll out, where is VWAP at this point? So the yellow horizontal line is the point of control. That's where the price that most volume has traded at. And then the white horizontal line is the VWAP, the volume weighted average price. And the other thing on your screen are these dots. And the dots are basically just where orders have gone through. Like these are trades that actually went through on the market. The green is aggressive buy orders and the red is aggressive sell orders. So it's just telling you who traversed the spread. Did someone meet on the ask, aggressive buying, or did they meet on the bid? That is aggressive selling. So I use it a lot for active day trading, for active swing trading. It just gives me an idea. So like right here, one way you could use it is there's a lot of active sell orders at 500. You could probably put a sell order there yourself and capture a couple, maybe anywhere from 2 to 5 points, a quick little rejection, little scalp trades. And if you're doing that throughout the day, those obviously do add up. So Bookmap, if you want to check it out, I am a big fan of it for day traders, for scalp traders. I find it to be a huge help. I mean, obviously, even the scalp trades I did this morning was all because of Bookmap. And I also used a little bit of EMAs, but feel free to check that out. It's pinned to the top of chat. It's in the description of the video. They have a lot of different plans, even starting with a free plan. So feel free to check it out. Like I said, I think you're really going to enjoy it. And then also shout out to Spot Gamma. You guys know that I use Spot Gamma literally every single day. It's how I track the options flow. It's how I see where the positive and negative gamma is. It's where I get this gamma map. I mean, both of these tools are very, very valuable. So check that out. That's also in the description of the video, a fat 80% off there. We are the only community that they offer this to. So if you want to take 80% off your Spot Gamma bill, to check it out, to see what it's all about, like I said, in the description of the video. And with that being said, we are about 2 minutes out before they lit everyone into the casino for a fun-filled day, which means in the final 2 minutes, let me know very, very quickly, as fast as you possibly can in a comment, what is the main ticker you are watching today? It could be a futures contract. It could be the index. It could be an individual equity. What are you watching today? What do you guys want me to keep my eye on? Where do you want to see the options flow? What do you want to have on the screen? Where is the community at? What are you guys watching? You feeling bullish? You feeling bearish? And most importantly, what in the world are you watching? What were you going to say in the video about quantum stocks, please? Oh, that it's just a pump and dump and they're going to completely fall. I don't know when, obviously, if I did. Timing is very important. But I think a lot of people following it are following the hype and they don't understand how far away the technology is from working, no less from it being a viable business. But the entire quantum push right now is just a FOMO pump and dump. And we're seeing the pump, or we saw the pump, and right now we're witnessing the start of the dump. Palantir, SPX, GME, SPY, Tesla, XRP, MNQ, App. Okay. Open. How is Open doing? Open was about to collapse, but it didn't. It saved itself when they announced this. Wait, where's the stock split thing? It was about to collapse, and this is another orchestrated pump and dump. Like it is what it is. And remember, that's fine. You can make money off pump and dumps. I'm not saying you can't. I'm just saying, obviously, if it's a pump and dump and you know it's a pump and dump, that means it's an active trade. It's not an investment. When I say that, a lot of people take a lot of offense to it. There's a big difference between something that is a quality active trade versus a long-term investment. And people like to conflate them. They think that if something is a good investment, it's a good trade. They think if it's a good trade, it's a good investment. Those are two completely distinct things. Open. These quantum plays, they're very evidently FOMO pump and dumps. So yeah, trade them to the upside as they're going up, trade them to the downside as they're going down. You can make a lot of money. They're phenomenal trades, but that doesn't make them good investments. Also, very quickly, dingity ding ding ding, the world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. All right, as the bell goes dingity ding 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 and they lit us into play today, we're seeing a little bit of weakness. Both the SPY and the Qs, the NASDAQ, are below their low from yesterday. We're seeing potential pivot on the daily chart. I do want to point out that the NASDAQ does not have an upside gap fill as of this one. There is a pre-existing one, but we already just got it in minute one. However, the SPY does have an upside gap fill to 680.95. So right here, there is a gap in the chart. That is a very active live play. And depending on your risk reward, that's probably a good target to have. Very, very good chance that we hit that at some point today, especially because it's so incredibly close. It was only about 27 cents away from the high value. So I will very much be watching that. Disney out of the gate puking. The Qs got their upside gap fill, taking a little bit of a puke right now. Tesla getting its downside clapped down 2.2%. Wow, that's a legit breakdown on Tesla right there. We're actually below the 50 EMA. Holy crap. There is a little bit of an upside gap fill there. How bad is Tesla going to get today? Microsoft is actually trying to recover. AMD holding strong. SoFi hitting a new all-time high yesterday. Palantir trying to save its 50 EMA. Apple just chilling. Meta not looking good. Avago just chilling. What else do we have? Amazon giving a little bit back. Hood also battling it out at the 50 EMA. Rum not holding. CoreWeave not holding. Oracle not holding. Oklo flat. Coinbase drifting down. Hut battling at the 50 EMA, not so good. Did I just get another alert on Tesla? Oh, that's a weird alert. I don't know what that was about. Open giving a little bit back. But like I said, pump, and you're now witnessing the dump on all these quantum names. There's the fundamental argument for quantum stocks right now is literally devoid of any logic. These companies are so incredibly far away from making it a viable technology. And then beyond that, even if they make it a viable technology, the business for it is not there. There's no like real plan to go to market and generate revenue. If anything, these are just very, very expensive like science fair projects. And as a fan of science, I like it. Like I want them to progress and I want them to learn more. But in terms of what I put my money into it right now, we're just simply too far away. We are like just simply way too far away, and the market is starting to realize that. So we had this giant pump, almost got clapped, reversionary bounce, put in the lower high, and now it's not holding the 50 MA. It's taking out this recent shelf. I mean, I think it's a matter of time before you have qubits back down to 15. I think it's a matter of time before you have Rigetti back down to 17. I think it's a matter of time before you have IONQ back down to 40. I mean, we're just going to be returning to the scene of the crime. The scene of the crime started in early September. That's where this takeoff happened. That's where the pump really initiated. And I think that's exactly where we're going. It's just gravity is going to win out. And fundamentally, none of these are strong companies. And the people who are arguing that they're strong companies, well, they just haven't done more than 5 minutes worth of research because they're just not there. So I hate them as an investment. I love them as a long trade in here, and I love them as a short trade in here. Those are two completely distinct things. All right. Disney not having a good run today. Cisco is up decently, but let's see. I'm looking for the SPY to get its upside gap fill, and hopefully for the bull camp, it can continue from there. But obviously, there might just be some quick profit taking right at that level. I do want to remind you that on a 0 DTE basis, there's not much stability in the market right here. Stability is actually down to 3%, as in expect larger ranges. We could easily be whipping up and whipping down. There's just not much stability because on a 0 DTE basis, there is a lot of negative gamma, which means when we get going in either direction, whether bullish or bearish, you can really get going. As we start to push 50 today, based on the current trades, yeah, there's more positive gamma up there, so things could slow down. But in all reality, we're not even that close. I do like this technical support at 6,800, and also the spot gamma implied one-day move low is around 6,785, so we'll pay attention to that as well. But we didn't get the upside gap fill. Things are getting hit this morning. This is not the strongest opening, that's for sure, but I'm attempting to really not do anything quite yet. I want to see how this plays out. The SPY tried to get going today and just got clapped 5 minutes in. And then if we're looking at the Mag 7, it was down and just kind of flat. Momentum wise, the 5 minute is bearish, the 10 minute is bearish, the 30 minute is bearish, and the 4 hour, we're actually witnessing a breakdown as we speak. So that is not good. And looking at the NASDAQ, 5 minute is bearish, 10 minute is bearish, 30 minute is bearish, and the 4 hours also breaking down. So from a momentum perspective, as of this moment, as of 9:35, price structure on the short term and momentum on the short to medium term are all actually bearish. Options flow is kind of indecisive. It was trying to go up, try to get hit. I do want to remind you there is that upside gap fill, but for me, I just need a little bit more data. I guess you could yell at me and be like, but Matt, you already traded. I did trade because I thought, hey, today might be crappy, so maybe I could get in a couple little scalp trades, so I just don't really feel pressure to trade today. So that's exactly what I did. On the accounts with large buffer, I already made 250 each. I did 2 little scalp trades, 125 each, scalped it really early this morning, I don't know, around 7 a.m. And then on the accounts with less buffer, I did the same trades. I just did it at double the size. So there was a bit of slippage on these. And then there was some slippage, like some are at 390, some are at 565. So anyway, yeah, I already threw in some trades. And the reason I did that is because I thought that the opening session might be really, really crappy. And even though that was me taking on a risk, I figured the risk might be worth it just to get me out of my own head where I don't feel that pressure to trade. So if I see an opportunity, I might take it, but I already have my money on the day, so I don't necessarily have to do anything. I'm trying to remove pressure from myself. I am still awkwardly waiting to see if these payouts get approved on the first 15 accounts, the ones that have larger values, the ones that I made a smaller amount of money today, these 246s, just because the accounts I've already requested for the second time, $30,000, 2K from all 15 accounts. I'm waiting. Right now, the request is still quote unquote pending. So I'm waiting to see how that either does or doesn't play out. But I did notice something really, really cool this morning that I want to show you guys on Apex. They post all of their payouts in real time to the individuals. So it's actually very, very transparent. And I thought this was crazy. Check this guy out. Check where, oh crap, where is it? Where is it? Oh no, they've already approved so many more that I lost it. Someone got a huge amount of money. Where the hell was it? Well, this guy, Patrick from Switzerland, got a good chunk, about 20K there. But that wasn't what impressed me. Right here. Check this out. This guy approved yesterday. Ramazan from Germany. Look at these amounts. 64, 64, 64. He got 12 different payments of $60,000. We're talking 720K, but did not stop there. Then from there, another 100,000 plus. This guy, that's an $800,000 playout, all highlighted. How crazy is that? So Ramazan in Germany literally approved for $800,000. So I was wondering why things were slowed out yesterday. I'm like, why are there not that many approvals? I mean, they're just, it's because they have cases like this. $800,000. Holy crap. How crazy is that? So 12 different accounts, 60K each. So that's 720,000. And then another 100,000 plus. So it's around 830K. This guy just got paid. All approved yesterday, November 12th. crazy. And since then, I haven't seen any. I mean, there's still big numbers, but I haven't seen any other at like that scale. I mean, it's just such a gargantuan amount. Where was the one that we just saw? Someone else was getting a good chunk there as well. But anyway, as of this moment, I'm not seeing Matthew anywhere coming up. I'm not seeing Matthew in the USA for 30K. So I'm still on that in between, waiting to see if I get approved or anything like that. So his accounts are fat. They are. I mean, it just shows you. I mean,
Order submitted. Target filled.
Wow. All right. So the bot just traded right here. Another 195 right about there. Took that break. That's the Orbo bot right there. The Orbo bot locked in another 195. Ever since I've been showing you guys the new and improved Orbo bot, it has not missed yet. It is just the easiest $200 per day. Slowly but surely, this account just is climbing and climbing and climbing. And what I like about it is it's fully automated, as in I don't have to think about it. I could be chatting with you guys, rambling off on how some other guy in Germany just got paid $800,000, and the bot takes care of itself. You guys kind of heard the audio. It got in and got out before I could even switch the screen. 195 locked in. That is not Icarus, to clarify. Icarus is my other trading system. One of many, actually. This one is just a run-of-the-mill Orbo bot, and it kind of got its genesis a while ago when people were telling me that the 10-minute Orbo is the best thing ever. It's not. If you're trading every single 10-minute Orbo every single day, you will be a net loser, but you can very easily switch it into being a net winner by only taking the Orbo if it's with trend. So this Orbo broke to the downside, and on top of that, it was with trend because we were trending down. So that's my little quick tip to you is to, I mean, how comically easy that every single day I'm just showing you it's another 200, it's another 200, 200, 200, 200. Easy peasy lemon squeezies. I don't have to think about it. I already wrote the code. All I have to do is enable it, and then I just move on with my life. So right now, I have 20 Apex accounts. They all got paid. I have one Funded Futures Network account that got paid. And then I have 5 Take Profit accounts, and they've already been paid today. And in fact, 1, 2, 3 are already done. And then the other ones, I just need to make another $60 and another $35. And then these ones will be done too. And they'll be good to get promoted to funded. And then, like I said, I don't know. I'm just trying to be transparent, showing you guys where I'm at. You guys see my successes, you see my failures. And right now, we might be on a little bit of a trend transition here today. Wow, this is getting hit this morning. Mag 7's getting hit. SPY just got a flow alert. Oh, go bigger on Orbo. What do you mean go bigger? I am trading the size that is technically optimal. So just through recent data mining, I'm at the optimal point. All right, so we are at the first key test of the day, and this is the first big watch. The question is, are we going to bounce here? Will the bulls step in at 6,800? Will the bears, I guess, falter? Will they choose to stop selling at 6,800? This is our first real big test of the day, and I have no idea who's going to win it. And I don't think that's the way that any of us should be approaching the market. I think the way to approach this market is just to watch it. If we bounce off of it, great. You can use the bounce level as your risk, and you could play it back up to 75, maybe even 40, maybe even 51. If we start to break down, great. You could use whatever the recent high is and try to pay the continuation sell-off and target something like 75, 80. I don't think that there's anyone in this world when it comes to the trading that has some sort of clairvoyant ability telling you what's about to happen. It's a game of reaction. It's not a game of prediction. All I could tell you is we're at a key level. I would assume, I would assume there's a lot of buyers coming in here on the NQ. Look at that. They're all at 300. I can move my big head over so you can see a little bit more, but you can see there's a ton of people trying to buy it right at this low, sitting buy orders. Now, the sellers could easily override it if there's that many sellers, but we don't, they literally just took them out in real time. Once again, this is Bookmap. They are the partner of today's show. If you want to use this tool yourself, it's pinned to the top of chat. It's in the description of the video. There's a lot of phenomenal offers. It's not just one. There's even a freebie offer. So I think everyone who wants to use this advanced DOM, the depth of market, to track where all the buyers and sellers are, highly recommend checking it out. And we are really battling it out at 300. Here's some buying coming in at 290. I'm just kind of giving this moment, the market a moment to breathe, because it seems like things are getting a little bit frothy. Seems like things are getting a wee bit frothy. The daily chart is actually showing some legitimate weakness right here. SPX, we showed a lower high, a breakdown, but there's still this weird upside gap fill that we technically have not hit. So now both the SPX and NDX at different levels have upside and downside gap fills. So the SPX upside gap fill is 68, crossing up. 6829. The downside gap fill is 6730. If you look at NDX, there's an upside gap fill at 25887, downside gap fill at 25,065. So both SPX and NDX at completely different levels have gaps to the up and to the downside. So the structure is potentially showing a lower high on SPX and on NDX. So maybe we bounce at the 50 EMA again. Initially, that was a good dip buy, but we're seeing quite a bit of weakness this morning. I do want to point out, I wouldn't currently be chasing this to the downside. If I was chasing this to the downside right now, whether in the short to medium term, my risk would be very tight. I'd probably be risking 806. I don't like to chase it on the first attempt, especially when it's such an important technical, psychological level. No one in here should be surprised if we bounce off of this level. It's just a very important level. And generally, you don't see it actually break on the first attempt, which is why I don't like to chase it at all. But if I had to chase it, I definitely would not be chasing it on the first attempt. If anything, I would prefer attempting to chase the bounce, as in if we recover, great. Your risk is only 6 points. Your risk is only 5 points. If we start to recover out of this, if you start to see some of the positive flow, which we are not seeing, S&P 500 may be showing a little bit of life. But if anything, I would prefer on this recovery, like pretty much now, to take this long, and my risk is right here. Boom. Attempting to catch a falling knife, which maybe isn't your favorite strategy, but for people who are trying to pay the key level, okay, great. And we push up to 806, great. Move your stop to break even, and it's a freebie play. We don't have to overcomplicate this. No one knows the next bar. The next bar could be a giant green bar. The next bar could be a giant red bar. If you're attempting to predict those types of things, you're never going to get anywhere in your trading career, because the answer to this is unknown. It's determined by everyone in aggregate. Are they buying and selling? So unless you know what market-wide they're about to do, you cannot predict this type of thing. But what you can do is very rapidly get in your control of risk and reward. So like I said, you have this long at 99, 800, your risk is 95, the push up to this recent high, you move your stop to break even, and you have a freebie play. If it fully recovers, great. That was a phenomenal trade. If it breaks down, well, you're either knocked out for break even or you took a small paper cut loss. Like, no sweat off your back. It's especially for day trading and scalp trading and that type of thing, it's a game of risk reward management. It's not a game of prediction. There is a point for prediction in the overall market, but that is much more of investing, a longer term thing. In the short term, the data is too noisy. It's too random. So it's these types of trades. I have no idea if this one that I'm pitching you guys right now, 800, I don't know if this will pay or not. But what I do know is this methodology, time and time again, when you are going long at key support, your risk is minimal and you have the management of, as soon as it goes a little in your favor, moving your stop to break even. In the long run, that's going to pay, because whenever you're wrong, you're either taking a small loss or no loss at all. And even if you're right 30 to 40% of the time, you get that full entire recovery, easily paying off your losses. So you should never be going all in on one individual trade, because one individual trade is basically going to be normally distributed and you just don't know how that's going to play out. Like, you never go all in on one hand of blackjack, because there is such thing as variance. Like, obviously that's very, very important. So here you're buying at recovery, you're buying at a key level, you have well-defined risk. And then at that point, you flip the coin and just see if you're right or wrong on that trade. And obviously, even if you break down, you could, if you wanted, you could quickly switch it and just risk whatever the recent high is and do the same thing. As it goes a little bit in your favor, move the stop to break even. You're just trying to get in with the most minimal risk possible and seeing if you could catch whatever the next trend is. You're not trying to predict the next trend. But honestly, I like this one to be bullish, just because this is the first test of the key level. And like I said, by the time it pushes 806, which it's about to do, I would be moving my stop to break even. This dude has never played blackjack with us. Well, I should say that's not how you should be playing blackjack, but that's a very big difference rather than how you are. So anyway, this trade that we're talking about in real time, which I think the best way to teach about trading is to do it in real time, because that means you don't have the next bar. I find too many people try to educate in this space, but they already know where the chart plays out. So it's a lot of cherry picking. It's a lot of Monday morning quarterbacking, whether consciously or subconsciously. If you know what's about to happen, well, yeah, you're going to skew your commentary and your discussion to benefit wherever you think the end should be. So if you ask me, I'm not saying that that is necessarily bad, but I'm saying it is way better to talk about educating in this space with real-time information, because that means we all are equally in the dark of what the next bar is going to be. Like, we are all equally in the dark of the next bar, which is probably the most fair way to talk about this. I'm talking about this long right here at 9:46, and I don't know the next bar. Well, inherently, if I'm talking about today at the end of today, I'm going to have all that information. And as much as I might rewind and say, all right, think about this and that and the other thing, well, I'm going to be skewing it. But like I said, by the time we push 806, 807, if I took this long, I'd be moving my stop to break even, and I would just be like, cool, it's a freebie play. Let me move on with my life. And if it plays out, great. If it doesn't, oh well, it is what it is. Talk about cherry picking. Look at the bullish hammer. SPX should have rocketed. What do you mean? Why does a hammer mean that the market should have rocketed? You think that there's some sort of rule in the market that as soon as you see a hammer that it has to rocket? That's what I don't like. I'm not a person who's against technical analysis, but I'm against most people's takeaway. They're taught one technical setup and they think it's the fucking holy grail of trading. And as soon as they see it, they need to throw all their money onto that trade. I think it's the most silly thing. And I think it's not necessarily the person who's learning from it. I think it's how it's taught, that a lot of times it's taught that way of like, if you see this, you gotta be bullish. No. Not at all. Technicals, if you ask me, have actually the one that has the highest odds in terms of prediction of accuracy is head and shoulders and inverse head and shoulders. All the other ones around 55, 60%. So do they give you a slight edge? Yes. But if anything, I think they're more viably used for risk management of like, okay, if I see the structure change, I should probably pull the ripcord. But like I said, okay, here officially, I was talking about going long at 9:46 at 9:46. Rewind the stream if you don't believe me. At this point, we took out these recent highs. Your stop should be break even. You have a freebie play. Your risk is nothing. Your stop should be at break even. So if this turns against you, okay, whatever, you're out for break even. But however, maybe, and let's even, let's say that there's a 30% chance. Okay, cool. You have a 1 in 3 chance of basically riding up 25 points, and then you have a 2/3 chance of it being break even, as in it comes back but knocks you out and you didn't lose anything. That's a phenomenal setup. So 2/3 of the time, you're losing nothing. 1/3 of the time, you're making money. Who would not take that setup time and time and time again? So that when I say it's not about prediction and it's about risk management, that this example right here is 100% what I'm talking about. Now, what makes this particular play uniquely strong is the fact that we still have an upside gap fill, and the odds of that getting hit at some point today are very high. So that means you have a very natural target of 6829.62. So you're in at 800. You were risking 5 points. You're now risking no points. Your stop's break even, and you might get to ride it up 30 points. And on one contract, that's going to be 1.5K on one ES contract. Obviously, you could play with SPX, you could play with SPY. There's a gazillion different ways you could play it. But overall, like, what a setup. Like, what an easy setup. What an easy play. And that's even me saying, like, I will fully admit, I don't know how it's going to play out. But in terms of the decision making and in terms of the risk management, that was a great decision. It was an optimal trade. And just because it's a great decision, optimal trade, that doesn't mean you're going to make or lose money. But all we could possibly judge ourselves on is the decision process, not the outcome. If you're judging your trades based on the outcome, well, you're judging it on something that's outside of your control. What's in your control is the decision making and the risk management and the sizing and everything in between. Bitcoin a pop. Oh, Bitcoin did get a pop. Holy crap. VIX is also coming down. So I'm still looking for this upside gap fill on SPY and on SPX. I am looking for that upside gap fill. Thinking in bets. Yeah, that's probably a better way to say it. Let me move myself over here. Here's a little bit of Bookmap. Remember, Bookmap is the partner of today's show. So if you want to check it out, they have a lot of great options, including a free option. It's pinned to the top of chat in the description of the video. But I wanted to turn over to this to see if I should be doing any trades here. I wanted to turn it over to this to see if I should be doing any trades. Oh, well, that's the wrong account. So that would have been my first mistake of the day, trading on the wrong account. That would have been a little bit embarrassing. I'm just watching the fact that right here, all the EMAs were down, down, down. Now we're kind of going back up, and I'm watching this dip at the 50 EMA.
Order submitted. Order submitted. Order filled.
Well, that was easy. So these accounts are up to 360. These accounts just got pumped to 618. It happened way too fast. I was actually trying to get in at 65. I got in at 74. And that means that my profit was way less because I wanted to get out at 75. I wanted to do 65 to 75, risking 50. So basically a little bit of a negative risk reward trade, but my entry was way too slow. So granted, I made money, so I'm not going to complain, but I made less than, these accounts, dingity, ding, 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 winner, winner, chicken dinner. I am done with my take profit accounts. They all hit their profit target. 3K, 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 3K. So I am donezo. I am donezo with those accounts. There's no more point in me trading them. No more point in me trading them. So let me update this. Cool. Dunzo. So these were obviously evals because they don't say pro. So the goal is to trade 6 days and 3K in profit. 3K, 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 3K. I think they've now only been trading for 3 days. So that means for the next 3 trading sessions on the take profits, the TPTs, I just need to do a quick little scalp trade. So those are done. That's awesome. Don't have to worry about those. Arguably, I'm not touching the FFN account because that's just the bot account. That's the Orbo trade. The top 15 Apex accounts, the ones that are up less money today, I could end it. I don't know. And I would actually love to get your thoughts on this. Like, what should I do? Because I'm just waiting for the payout, but I should keep trading. Damn, if I held that, look at how much money it would be already up. That's crazy. VWAP is already 100 points higher, so that could be an interesting test for sure. But anyway, for the when I say large Apex, I mean the ones with a large amount of buffer. They all started at 50K. These are up 20,000. These are only up 1.7. So these are up literally 10x the amount, which is why I'm trading them a little bit more aggressively to ideally one of these days to fix that parity. But it's going to be a slow process for sure. I don't know what to do. Should I keep trading these ones? Or do I just wait? Do I just scalp trade? Or should I trade to keep trying to build up the buffer? Mentally, I'm really torn on it. I don't know what to do. I don't know what to do there. I don't know what to do. I just requested 1K. Saucepan, that's awesome. First payout, that's awesome. Get your payouts to pay off and your credit card. So you're saying basically just keep doing the scalp trades, basically. Just keep doing the scalp trades. Just to build up, because you have to still trade. Every single payout window is 8 trading days at minimum. So obviously I shouldn't just completely stop, but I could just pivot to doing scalp trades. Matt, has James Wynn been liquidated? I don't believe so. We could check in on that. I believe James Wynn's liquidation is closer to 106,000, but I don't know. That story in itself is crazy to me, so we might as well look into it. If you guys are unfamiliar with what I'm talking about, this guy right now has a 40x leverage bet using millions of dollars against Bitcoin. 1 hour ago, I told you. When? To the minute. Do you understand? Like, he's really trying to use everything to get the market to drop. And when I say everything, he's using his platform, he's using his money. Repeat after me, I will become a billionaire. Like, he's really, really trying to bet on this cracking. And I believe his risk is around 106, 107,000, at least the last time he shared his risk level. Heavy spot sell pressure into this leverage long artificial pump. Whales are selling, delusional bulls are longing. Shorting my shorts, major dump incoming. Buy the rumor, sell the news. Everything I have predicted is coming true. Be formless, shapeless like water. Yeah, he doesn't seem to be really talking specifically about his numbers anymore the way he was. Oh, right here. This was yesterday, to be fair. Adding to the BTC short here, strong rejection at 105 after the SEE pump due to the $33 billion injection. Bubble is getting bigger. The issue is he might be right in his prediction, but his blowout liquidation level is so close that even like a little hiccup to the upside is going to destroy him. And then from there, he could still, quote unquote, be right in this prediction. He's just playing it like absurdly close. Yeah, he's using 40x leverage, which is just fucking insane. Like, absolutely insane. 40x leverage. You have to give it to those, I guess, crypto bros for doing such degenerate shit. Like, I don't know if I would ever do that, but I implore the balls that they have to do it.
Order submitted.
I am not in a position. I just have a pending order just in case we get a bit of a bounce here. I am currently not in a position, as you can see on your screen. Just in case there's a bounce, I have a pending long on the big accounts. Or no, excuse me, the small accounts that have more profit today. And just so you guys know, if these do run up to $1,000, I'll probably be done on the day. And by probably, I mean I most definitely will be done on the day if these read anything close to $1,000. It's just like, I think sometimes when your strategy is scalping shit, sometimes it's just like a drug and you could just keep doing it and doing it and doing it. So I think before you start that, you have to know the spot that you're gonna be like, okay, I'm gonna be done, because other than that, it could just be endless and you could just be doing that shit forever and ever and ever. And I don't think that's necessarily a good thing. So I'm kind of drawing a line in the sand. So I'm up a decent chunk, 618, 618, 618. These ones also did well. So on these five, that's really what I'm focusing on, is the 618 on all of these. If they get 900, 1,000, 1.1, we'll call it a day. About to possibly hit a dangerous breakdown spot. Yeah, I mean, anything's possible. We could also have, like, that's what I'm saying is, it's just watch the key levels, whether you're talking about individual equities, crypto, futures, the overall market, whatever it is. Just identify the key levels, identify where big money's at. And then when we get to those levels, set an alert so you know to pay attention. And then from there, try to play the trend that is created off the reaction of that key level. If I had to distill like what is trading, that's exactly what it is. It's paying attention to the key levels and using optimized risk reward. Well, this isn't looking so good. I might kill my order. I had a pending buy order all the way up here. I either want to move my buy order or I want to maybe switch it to a pending sell order if we crack this low. What's going on with the flow? All right. We put in a lower high relative to where we were, and we actually just took out these lows. So and vol's picking back up as well. Here's a look at the Mag 7. We are trending down. Here's a look at the S&P 500. It was trending down, got a pop, and then at 10, we saw a little bit of that 10 a.m. reversal, I suppose. A little bit of that 10 a.m. reversal. 5 minute, 10 minute, 30 minute, 4 hour bearish. 5 minute, 10 minute, 30 minute, 4 hour bearish. Which does bring to question, if it's all bearish, Why am I scalping it to the upside? I suppose if I had to articulate it of why I'm scalping to the upside is I saw this nice support at 800, which might be getting tested again. And I was still looking for this upside gap fill to 829. So maybe not the smartest play, maybe not the most technically sound decision making, because even though there is that upside gap fill, by definition, I am fighting trends. So maybe I should pull my orders from now.
Order canceled.
Now that I'm like consciously realizing that maybe I'm having a little bit of a mismatch here, brother. Maybe I'm having a little bit of a mismatch here because yes, there is the upside gap fill, but it's also downside gap fills. I was a little bit excited of the bull stepping in. Oh, by the way, probably scaled out here at some of these highs, or maybe you did at 806, but somewhere in here you probably took some of your profits and now you just got knocked out on the second half for break even. So the play's over. You made a little bit of money and you just got knocked out for break even. At this point, you could pray for a higher low to be created and then you could play it off this low. That's completely allowed, but you want to protect yourself on the initial push because you never know if it's just going to be a random vomit. When you always got to be prepared for the worst. Assuming the worst will help you become the right level of paranoid obsessed with your downside risk. Always, always, always assume the worst. I apologize in advance, acting responsibly. I know. I feel like a whole new person. It's like, what did you do with Matt? And we want our guy back. But it is nice. I mean, on days like this when we're awkwardly in the in-between and I've already made money, for some reason, I just don't feel that much pressure to do anything. Granted, I was thinking about taking this short at 38, which would have paid. It would have paid. Oh, man. It is nice to get a couple scalps in here and there. And the reason I'm scalping is, first of all, I'm wondering mathematically if it's better for the new accounts to scalp rather than trend follow. Just until you build up a buffer. It takes a decent amount of buffer to be able to successfully pull off trend following. Are we bouncing off 800 again? It looks like it. Surprise, surprise. Second active play. Your breakout, you're long at 804. You're risking 98. You're risking 6 points. By the time it pushes 809, 810, 811. By the time it pushes in here, you move your stop to break even. You have another freebie play. Are you kind of noticing how it's the same general methodology of trying to get in at key levels, trying to play the trend from the key level appropriately, and then just aggressively moving your stop to break even? That's how I view the market. I am by no means pitching to you this is the only way to be successful. I'm just pitching to you like how it's made me successful. So it's one of many, many ways you could make money. But right here, your stop is now break even. Congrats. Second play of the day. And maybe this is the time it goes. Maybe it is, maybe it isn't. You don't know, but you don't really care. You could scale out a little bit at this high. Maybe at 13 is your first scale out. And maybe it goes to 25 to 29, whatever. But it doesn't, like, it's a free play. Your stop's at break even. Like, it's not going to cost you anything. But I do want to clarify, this is how I view the market, and it's made me money. It's made me profitable, but that doesn't mean it's the only way to make money. You might be saying, well, hang on, I do X, Y, Z, and I'm net profitable too. Great, awesome. If there's a way that the market makes sense to you, I highly implore you to take advantage of it. Highly implore you to take advantage of it. What's the next support on CoreWeave? Ooh, not close. I think CoreWeave is a non-play. It's too far away to short, and it's too shitty right now to go long. I think CoreWeave is a non-play at the moment. Like I said, you're too far away to get in a good, solid short, and I don't know if I'd want to dip by after the earnings and the news. So I think it's a non-play. Maybe between 50 and 60, you could find some sort. That is not looking good. Lower highs, breaking support. But just because it's not looking good doesn't mean you chase it to the downside, because there are upside gap fills. Anyway, back to this trade. All right, if you're playing with size, you would scale out a little bit at that high. Your stop is already break even, and now you have a runner for 29. Easy peasy lemon squeezies. Thoughts on open? I think it's a pump and dump, so I wouldn't invest in it. And I think the people investing in it are like absolute dipshits. But I do think it's a fun, active trade, both to the upside, to the downside. Right now, this is a bit of a tricky one, the current setup on it. Obviously, I'm watching. Oh, everyone shut the fuck up. Everyone shut your goddamn mouths. Shut your fucking mouths up right now. Everyone, shut up. Your boy just made $30,000. 0 minutes ago, 10:08 this morning, $2,000 has been approved, and then multiply that by 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Bada bing, bada boom. 30K. He did it. He's on his comeback tour, folks. He's on his comeback tour. Just got the notification. Fucking 30K. $30,000. Let's see. Let's see if I'm on the payout. Hell yeah. So 30K denied to 30K approved. Dude, my heart's going right now. Let's see if I'm on this. Let's see if they put me on that. I'm not seeing myself on. Oh, because they haven't updated it yet. Because it's the 12th. But there you go. Approved. And just because I know people are going to call me a good for nothing liar, I'll show you actually within my own Apex, because like I say, I try to be as transparent as I possibly can. What is the password? Hang on, I'm logging in. Payouts, request payout, right there. Approved. 15. Oh, you guys cannot see that. Right here. Approved. All 15. $2,000 times 15 accounts. He's back on it. He's back on his bullshit, folks. He is. I am vicariously wealthy through Matt. Well, I can admit that $30,000 is going to be helping with my credit card bill, because my credit card bill is somehow larger than that. So that's a nice win. That's actually a really nice win. Sweet. That was approved pretty quick. Obviously, I requested it on the evening of the 11th, so it took a day and a half, but approved across the board. There we go. Now get your credit card bill paid. Yeah, I probably should. Well, that's cool. I was wondering why I was getting so many, like my phone was just buzzing. I was like, what the fuck is this? But it was good buzzing, not bad buzzing. It wasn't margin calling. It was Apex saying, hey, man, we'll give you some money. It was Apex saying, hey, brother, we'll give you a little bit of money. Guess who's editing on their day off tomorrow? Hey, we could push it a little bit. So now I could degenerately bet on these accounts again, right? Are you guys hearing what I'm hearing? That I'm able to degenerately bet on these accounts? Because that's what I'm hearing. I passed the eval for Apex. Use your code, but I can't figure out how to get funded same day. Well, if you pass it, you then have to you have to sign the signature thing, and then you have to pay the upgrade fee, which should only be $40. But on the website, you're going to see, like in your account section, there's the active, the past, and then the PAs. It's in the middle one. You click on that. But in the calendar day, it takes one cycle. So you could pass it in one day and you could start trading on the funded accounts the next day. They cycle it when the market closes. So you can't pass and trade on the new account in the same calendar day. If that makes sense. 30K. Well, I went from here feeling pretty good about my life of just saying, yo, okay, we made a couple thousand, but to have it actually approved. So, and the accounts, they did drop in value. Remember before how I was showing you they were all 70K? So they already took the money out. Wait, can you guys see what I'm seeing? No, you guys can't see. Right here. Remember before so they've already deducted the money from these accounts. These were all 70,000, and now they just all knocked down to 68. All got knocked down to 68. So the money's already out. So even if I was concerned about that, because even if I blew out, I was like, okay, am I still going to get it? But yeah, the money's already deducted. So no matter how this goes, I actually got the money, which is, dude, what a fucking feeling of relief. Oh my God, what a feeling of relief. Now the question is, can I keep the train on the tracks? Because I was on a hot run from December to March where I made the $240,000. And then since then, I've gotten payouts, but none from Apex, because Apex I've always played larger. It's on the other ones, Funded Futures Network, Tradeify, and TPT, where I got a couple $1,000s here and there every month. But I haven't had like a big payout, like in excess of 10K at one time. So what a fucking March. So pretty much all of March, April, May, June, July, August, September, October. Bro, that's a lot of fingers up. That's 8 fingers up. I've almost had 3 fucking fiscal quarters. I've had 8 months of just jacking up my credit card bill, shoving my head through a fucking wall. 8 months. 8, like... It's one thing to be like, oh, okay, you made money and then you were grinding it out, figuring it out. And like, it's easy just to say 8 months, but you have to understand that was 8 months of day in and day out actively trying and having not only nothing to show for it, but actively negative results to show for it because of my credit card bill. Really understand that it wasn't just like, oh, and like half a year later and it ended up working out for him. No, it was 8 months of like fucking absolute turmoil. Of just fucking endless hours every night, just researching shit, more so of discipline issues, if we're being completely honest. 30K. The sad thing is I just need to keep the party going. It's one thing to get 30K, but then like to really kind of show off that you know what the fuck you're doing, you kind of need to keep just going with it. So I guess it's not the first step in the journey, but it's the first medium step in a very, very large journey. God damn. Well, that's fun. 8 months. 8 fucking months. It looks like we're running right back up to 500. I had the long here at some point. Matt pretends like it's not his sugar mama's money and credit card bills. It is. I've just been using, after I get done streaming, I'm just a cute little pool boy for a billionaire widow. I'm just a little New York pool boy. We are reversing gender roles. That's how I run my life. 50K account to 68. So Apex is up 18K per account on 15 accounts. Yes, right here. After taking out 2K. So I just successfully took out. They were all up to 70K. And then I have 5 accounts that are new baby accounts that are only up 1.7 each. So these ones are up basically 17, 18K, and these are up a tenth of that. They're only up 1.7. Matt, who are the investors giving their money to degen Apex traders? What? Hey, Matt, who? I don't understand the question. Who are the investors giving their money to degen Apex? I don't understand the question. I don't know how to answer the question because I don't know what the fuck you're asking. I have no idea what you're asking. We almost got the upside gap fill on the SPY. We almost got it on SPX, but we're having a little bit of profit taking before that occurred. The credit card company is Matt's investor. I mean, I guess to directly answer the question, the credit card company actually probably, whose money funds on Apex? It's all SIMDA funded. Simulated. Sim.
Order submitted. Order submitted.
Well, that was a fucking horrible fill. Why am I getting so much slippage issues? That should have been in at 64 and it was in at 69. It was in literally double past what the target was. Shit. But then on this account, it was better. Well, kind of close to better. I'm confused on why it was so far off. Is it going to hold this 50 EMA? Is there a good Apex deal right now? No. The deal just ended yesterday and they haven't announced a new one. So at this point, if I had to buy a new account like right now today, I'd be going to a different firm, probably TPT. Once again, you could use the code Goonie on any of the main ones and you're going to get whatever the current deal is. But Apex's deal ended yesterday.
Order filled.
What the fuck? Something is going on right now that I'm not quite understanding. My brain is not processing it. And I'm almost wondering if I should just close out to figure this out. Oh, wait, no, it's the little accounts. Wait,
Order
why are they
submitted.
trading 5? What the fuck is happening? This is trading the wrong strategy? What is this low? These are trading 3, and wasn't this one just trading? Well, it's not showing it anymore. I think I saw 5. Something is wrong with the contract size. Makes me kind of want to just cut this position and try to figure out what the fuck is happening because something is off. Also, I hate this because it seems like it's going to go to 400. I need kind of a miraculous recovery right here. I could just close this now and be fine and maybe just call this a day. Maybe I just give it this low. How the fuck were those trading 5 contracts? Did I double enter it? What did I do? What in the world did I do that happened? This isn't good. Rejecting here. Yeah, that's not good news. It's going to come get me.
Order filled.
All right, so what the fuck happened? So those are there, but then when I switch over here, data, hang on. Text and markers. Yeah, 5. Why were the small accounts trading 5 when both should have been trading 3? Right here, order quantity 3. But these traded it. I'm confused because like if there was a double order, it would be 6. What the fuck? 3. That doesn't make sense to me. 5 when it's 3. I don't know. I guess I'm gonna have to review the orders later. My knee-jerk reaction was like, oh, it was just a double order. Maybe I clicked twice, or if I had 2 orders, but then it would have been 6, which I guess I would have found as like, okay, like whatever. I did something stupid and I hit the button twice. What the fuck? That doesn't make sense to me. Or a limit, but it's still, why was it 5? If it feels like it should have been some sort of multiple of 3, and the first account's traded properly, but the other ones, I don't know. I'll have to look into the orders later. How would it trade 5 contracts? Oh, wow. Hang on. Mag 7 was looking good until 10:15 and then just got doused. So it's good I got out of that one position. The other ones got fucked. Wow. All right. VIX is picking up a little bit here. Let's go to the 5-minute. We still haven't gotten that upside gap fill. And range is clearly getting quite aggressive here. Quite aggressive. I wonder if we're just going to put in a higher low. I'm watching how far this pulls back. Obviously, if you're the 5-minute on ES almost got green, got smacked pretty aggressively though. Where's SPX? Here's the daily chart. We did wick down. We're trying to recover. We got up to 25, which was pretty much the intraday high, also a key level. I'm just wondering, are we going to kind of hold this? Like, are we going to try to bounce out of here? Are we going to bounce out of here? What the fuck happened? What in the world was that? I don't know. At least they have the orders in there and I'll be able to check it out later. I'll figure it out. What is this? Is it going to bounce a little bit here? Nope. Looks like a rejection. I'm kind of watching this to see if this is a higher low. Obviously, you could take advantage of that. I mean, the first one was break even. The second one was pretty freaking good. This could just be the third attempt, and your risk is obviously, once again, the recent low. If you believe trend is up, if you have a bullish bias, that would be the entry. You're in at 815. You're risking 812. You're risking 3 points. Like, you're just keeping your risk small because you're looking for these types of opportunities where even if you're knocked out, let's say 2/3 of the time, that 1/3 of the time that you're right, it's such an incredible return that it then rapidly becomes worth it from like a net 24. Hang on. This is still red. The one thing I don't like about today is it feels like all the longs are fighting momentum because of how crappy the overnight session was. And it kind of is. VIX is picking up a little bit after getting hit here. Oh, the question is this wick that we just put in, is it a higher low? Like the question really is, if you're looking at the 5 minute, is it worthwhile to play this breakout and risk this recent low? Like, is this just... See here how we pumped, we pulled back, we pumped again. Is that all we're doing? We pump, we pull back, and then we're following through. Well, now we have to wait. What's the flow looking like? The Mag 7 was looking good. It got a nice movement from just after the 10 a.m. hour, 10:06 to basically 10:16. Had 10 minutes of enthusiasm. And then it's almost as if something got announced because that was just just rock sinking. And the SPY, same thing, 10:04. We actually hit a new delta high at the 10:16. So really, I mean, I guess if you're looking for the long, you need the Mag 7 Delta to stop puking here because there's quite a bit of call selling and put buying right at 10:16, 10:17, right here, longer dated, a lot of put buying, a lot of call selling, dropping the Delta in a pretty dramatic fashion. Like right there. That was a pretty nice recovery. Wrong, denied, rejected. Denied, rejected. I'm just wondering if we start to bounce. Hang on, where's this? We're still kind of coming down. I was a bit hopeful here at 10:24 of like, oh, okay, it's going to hold this cloud green and we're going to stay positive with it. But no, we are apparently not. And now you kind of have to be mindful of this trend line. Connecting the intraday low at 9:45 to the next major low at 10:04. That's when the options market started to go crazy. We got that pump all the way up. But now we are seemingly coming back down to it. So I'm watching this trend line roughly around 803, 804, then obviously support at 800. So watching to see how the market reacts to this. Let's see. VIX is still picking up. In retrospect, the short at 1020 was a nice short. I'm not the biggest fan of it because we didn't technically get the upside gap fill on the S&P 500. So from just a purely like just price action standpoint, I don't mind it. But when then you start to, I guess, consider some of the other odds, I'm not the biggest fan. I would have felt way better about that short had we actually gotten the upside gap fill because the SPY didn't touch it and SPX didn't touch it, which means that this upside gap fill is still in play. So it's tough to take this rejection short here when the odds are still good of some sort of recovery. What's the flow? Has the flow recovered at all? No, the delta flow looks like shit. The SPY flow might be bouncing a little bit here. Might be bouncing a little bit. Man, in the back of my head, my mind's still on how the fuck did that trade 5 contracts? What the fuck was that? I'm sure, I'm 99% sure it's something fucking stupid I did. I just don't know what stupid thing I did. All right. Right now, we still have not broken the 30-minute Orbo. I don't think. Did the Qs technically 812? No, we didn't. So neither the SPY nor the Qs have broken the 30-minute Orbo yet. So kind of waiting on that to see which direction we go. And really, I think what's going to be telling is the depth of this current pullback. On the depth of the pullback, do we keep either equal or higher lows, or are we going to break this last low at 10 a.m.? So I'm kind of watching this to give us an indication of what in the world is going on. I think if it's equal or higher lows, great. We still have that shot for the next leg to be the upside gap fill. But let's just see. I guess we're kind of also watching this recovery here. VIX is picking up, though, which is more suggestive of downside. Mag 7 just hit a fresh delta low. S&P 500 is flat right now. 79. Interesting. The 1 minute cloud just went red. Can you do all of your indicators in NinjaTrader and show how you set them up like point of control? No, because point of control is not on NinjaTrader or NinjaTrader or whatever the fuck you want to call it. As I've already said, that's on Bookmap, and Bookmap's pinned to the top of chat if you want to use it. Lots of buyers. Speaking of Bookmap, a ton of buyers coming in here at 55, 50, 350, by the way. A lot of buyers right there. Point of control is currently 78. But as you can see from the giant letters above my head, this is Bookmap. And someone just smashed it. And let's see if these buyers hold tight. Wow. We're bouncing 20 points like it's nothing. You got to be careful now. You should always be careful when trading, but now you need to be extraordinarily careful. Look at this. You have buyers at 51, 52, 53, 45. Oh, those guys just moved their order down to 42. So it's about 250 contracts are trying to be bought down here. They might be bought to open. They might be bought to close. We don't know. But we were finding support at the point of control, and now we're running into it. There was just another test. LOL NinjaTrader. NinjaTrader is a real thing as well. That's actually a standalone like indicator website for NinjaTrader. Look at all these buyers. Are they going to actually get filled? Are they going to get steamrolled? We're just seemingly battling it out a lot at this point in control. Do I have a video on how to use Bookmap? No, because Bookmap has a ton already. They make it very, very easy. They have like an entire library. And even like there's already so many standalone videos beyond their own library of how to use it. I guarantee you, if you just give it a quick search on the old Googler, you're going to find an immense amount of tutorial videos. I don't really enjoy making videos that have already been clearly made in the past. Matt, I downloaded NinjaTrader. Curious what brokerage you connect to it. What do you mean? NinjaTrader is a brokerage. You might, if you're doing SIM to funded trading, you might need to connect the SIM to funded company. But if you're trading like a true cash account, like Ninja is a brokerage. You would fund your Ninja account and trade your Ninja account. Yeah. we're, I guess, full tripping it today, folks. We are full tripping it today. We had a nice 10-minute pump leading to a pretty hardcore 20-minute sell-off, and the VIX is moving with it. Moving with it. All right, we just took out the recent low on SPY, and now we're watching the intraday low. Same thing on the Qs. So both the SPY and the Qs just took out that 10 a.m. low, and now they are gunning for the 9:45 low, which happens to also be the intraday low, which means that SPX cracked this trend line, not holding it, not giving us a higher low to play off of. We're at this key level. Maybe this is an overshoot and we bounce out of here. That's a possibility. But the more and more we test it, this breakdown level, more likely it's not looking so good. I saw your 10-minute Orbo video. How's that working so far? As soon as I put on a trend filter, it's undefeated. I haven't had a losing day with it. That's what I do on the FFN account right up here. This FFN account. It's making me 195 a day pretty easily. All right, we're watching this. Fed's Kashkari. Is this all because Fed members are talking? Is that why? White House senior advisor Hassett. We could get the September jobs report next week. It's already been cooked. Russian oil. Okay, so I think this pump and the following dump is because of commentary from Fed members and from White House advisors who seem to be on various forms of media this morning. Seems like a lot of these hits are on Fox News. Some of them are on CNBC. Oh, Jesus. We're going to find out. Is this the retest, that little kiss of death and we vomit? Or are we just going to bounce exactly how we already have today? Based on the momentum, not looking the best, but I guess crazier things have happened. I'm not seeing a risk point I necessarily love. Fed's Kashkari, I see mixed signals for the economy. Some sectors of the labor market look under pressure. If you say so, brother. If you say so. Damn. VWAP's all the way up there. We don't really need this one right now. Oh, I guess this short wasn't the worst idea. Right here at 28. Fuck, that actually is now looking very, very nice. In fact, extraordinarily nice. This was somewhere shorting around 25. I was so close to doing it, but I think I was a little gun shy because I didn't necessarily want to dig deeper in the hole after getting the 2K out for the payments today. SPY just made a fresh low. VIX is picking up. Mag 7 hit a delta low. Oh, the SPY just got a flow alert. Someone dumped a bunch of calls and bought a bunch of puts right there. Selling 0 DTE calls, that's the green line dumping. Buying 0 DTE puts, that's the light blue line dumping. Enough that it was statistically abnormal. Jesus. All right, SPY fresh low. It was the kiss of death that we were talking, 1036, the overshoot, the test, the smack. maybe the way we tested it 1, 2, 3-ish times right here, maybe it wants to retest it. But we did make a fresh low according to, whoa. All right. If there's a seek and destroy going on today, we're playing it down to 770. 770 would be the seek and destroy. There's a large put credit spread right there. So how big? 17.7 thousand. Golly. All right. So if the market feels as if it needs to do the seek and destroy on SPX, your downside target would be 6,770, which I believe I already had marked out. Did I? I had 75. All right. So we're going to move this down to 70. We're moving it down. We're moving her down. Moving her down. That right there on an intraday basis would be your target right there. 770. Pretty freaking evident. And remember, if you want this info, spot gamma. It's all spot gamma. This is spot gamma. Fuck, dude. Why am I so gun shy to trade this right now? Well, I'm gun shy because of the hit I took. That's why I'm gun shy. Yeah, clearly trending down. Clearly trending down.
Order submitted.
Oh, brother, how do I want to do this? How in the world do I want to do this? Uh, 65. I'm not sure. I mean, I like it. It's with trend. I think I'm in my own head. Like, this is a legitimate signal from Icarus. It's not like I'm doing some sort of like counter signal, like random shooting from the hips. I think I'm in my own head because of already taking the loss. So I think maybe the best way to manage this. What is this high? 41. Yeah. Oh. I think the best way to manage it to keep myself sane is to follow Icarus on the entry the way I did, and then more aggressively update the stop. I think that's the way to do it. It's a legit signal. I'm trying to keep the trains on the track, trying to stay disciplined, stick to it. But because I'm being cognizant of this loss already on the day, I'm going to be more aggressive with the stop management. Like, it's just the odds of this. I know it's far away dollar size, but it's just like our ranges are ripping like it's nothing. I'm trying to be reasonable and give it a little bit of wiggle room here. But like, just look at that. Like, we went from 21 down to 91. We went down 30 points. Like, just in two little bars. If this can fall over right here, I'm just going stop to break even. Freebie play. Freebie play. Fuck it. All right. Stops break even. Free play. I want to be honest. I took the Icarus entry. Icarus wouldn't go break even until taking out 80. So I did front run it by 11 points. Matt, can you look at the 4-hour candle on November? I think they are filling the gap. Maybe that's going to be a natural target for a lot of people. Okay, so I am in a hole, to be completely honest, but I at least stopped digging. My stop is break even, and maybe there's a point of slippage or something if it knocks me out. But we're going to see how this goes. Show me the daily. That's not good. Not good. Not good. All right. I need to manage my other shit here just in case this is going for the downside gap fill. Hang on. La-ti-da. Hang on. I am updating my swing portfolio.
Order filled.
Sick. All right. I almost got myself out of a hole. And we're going to see how this works. I could probably update to this because that would actually be a huge win. Well, that's my break-even level roughly is around 40. What's the gap fill? Shit, I don't have enough data. Fuck, what's the gap fill? Help, help, help me. I have fallen and can't get up. The gap fill is 28.25. Shit. What was it? 28. There. Okay, cool. Done. I'm playing the gap fill. Come on, Bessie. Come on, Bessie. Give me that money. No, Bessie. We were off by 2 points. Fuck my life. Oh, brother. Oh, brother. Oh, brother. Oh, mother. Oh, brother. VIX is picking up. That can't be good. Where's our initial balance? We broke the initial balance. I'm worried about this retest. Do I just want to ditch this early? Because it's roughly back to break even on the day, which me being down 2.5, that's a nice turnaround for your boy. If it collapses here at 36, do I just want to move it to this? Yeah, I do. I'm just going to keep aggressively. Did we hit 70? I'm trying to be mindful of... No, so we still have a bit of distance to go. This has 10 more points to go. So I'm not being overly greedy. You could say it's a little greedy because the gap fill is 28, but we still have 10 points on SPX. VIX is going. The question is when. Sorry, I'm moving a little slow today. Yeah, that's all breaking down. That has to fill. How did that fucking not fill? Dude, don't do this to me, brother. Don't do this to me. We've been through too much today. No, 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 no. No, 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 no. 2 points? Well, that's a fucking kick in the balls. Really? Like 2 points? It's going to do that to me? It's coming all the way back up. Son of a bitch. Son of a bitch. All right. I just keep trailing to the recent high. I'm not going to let this get out of hand. Uh-oh. Which way is it going to go? Is it going to tag me first? Which one's it going for? 48 or 20? Am I going to be green or red on the day? This makes me slightly red. This makes me slightly green. Or I could just get out now. Baby green. Baby. Like basically a scratch on the day. What's it going to be? What's it going to be? It's not looking the best. Do I move it down to 40 maybe? That's so close. That's 8 points and we're moving 10 points like it's nothing. People are sneezing and it's going 10 points. But it does make it a bit more fun, I suppose. I just keep closing in on the stop. One of these is going to get hit. I'm forcing the range to get so much smaller. What? Is it coming for it?
Order filled.
Yeah, just tagged it. All right. Actually got all these accounts back into the green. They were up 300 each, then down 2.5K each, and now they're up 100 each. So I think that was actually pretty decent risk management. I do. I guess I could have taken it at the gap fill at 28. I was overshooting it for 20, and it'll probably hit anyway, knowing my luck right here. Literally, look at this. Knocks me out. Is probably going to go for it right away anyway. But I was more stoked to get these back to be green. So I'm counting that as a big W, especially because like I felt emotionally not okay with it, even though I was like, okay, it's a system, follow the math. So you guys saw exactly where I got in. Honestly, it was even a little bit of a late entry. I could have been in at 25. A guy got a fill at 14. I scaled out down here at 60, scaled out another one at 40. I was looking for 20. Unfortunately, it got to 22. It just didn't hit it, and it would have hit it right there. So just my fucking luck. I'm telling you, when you fade it, the fact that I bought there, you could have sold there, you'd have taken a point of heat, and you're already up. Like, I swear, if you just do the opposite of my trades where I'm getting stopped, it pays. It fucking pays. So I could have been up 500 an account, and now I'm only up 100 an account. But like I said, it's a 2.5K swing. You guys saw all of these accounts down 2.5 after a really weird mishap with the smaller accounts, which I still need to figure that out. And then these accounts are fine as well. So a weird issue on these 5, which I very much need to dive into. But other than that, I count it as a big win there. A big win. VIX is still going. Something's coming undone here. Yeah, we got that downside gap fill. We got the downside gap fill, and we're coming to this level. So I wouldn't chase it right here just because the question is how much more meat is on the bone. And all I could tell you is there is a gigantic node here at 770. Right here at 770, there is a huge fucking node. So I am watching this level like a hawk. If it cracks, yeah, we could keep going. There is an additional SPX downside gap fill all the way to 730. So an additional 40 points from here, which if you need the SPY level, that is 671. So it's about, I don't know, $4.50 roughly, give or take. Give or take from where we currently are, which is about, 44 points. So it basically you just move the decimal over by 1. But there is an upside gap fill. Downside gap fill, upside gap fill. NDX still has the downside gap fill. NQ got its gap fill, but NDX didn't. NDX still has one. SPX still has one. Little bit of a reversion here. Damn, it would have hit 200. Would have hit 200. Calls for SPY casino time. Why would you do that with the VIX spiking right now? That makes no sense. If you're right and price goes up, the VIX will get hit, and then you're going to lose implied vol anyway. That doesn't make sense. The buying calls into a dip is mathematically very different than buying puts into a rip because of how volatility is going to react. So if you're buying calls right now, it's stupid because if you are right and price starts to go back up, vol's going to fall and you're going to lose premium anyway from IV crush. I'm wondering if this was a worthwhile short here at 20. You're short at 20. You're risking 32. You're risking 12 points. Your first target is 220 points. You're almost getting knocked out here. But it's we haven't really hit 70 yet. You'd think that they would want to test it. And when I say this level specifically, it's not a random level. It is the giant fucking gamma node we see on the chart today. Giant gamma node, 770. Bitcoin is at 101. VIX is spiking. VIX is picking up. Little gap fill on VIX there. They never make it easy, do they? They never make it easy. So anyway, back to this conversation of it would be stupid to buy calls. You could do call debit spreads. You could also sell puts. So I'm not saying to not be bullish if you think it's going to bounce from here. I'm saying to use a product that makes more sense to play. Because you're just going to, if you are going long calls, you're going to experience too much vol crush, and the chance of you making money is like slim to fuck all, even if you're right. And then if you're wrong, and you're going to lose money no matter what. So when you have sharp sell-offs, even if you pick the bottom properly, going long calls is the worst decision. It is better to go, if you wanted to, you could go at the money calls. A debit spread is probably a better option. Selling puts is probably a better option. Or if you still want that leverage, you would go long in the futures market. But I mean, out of all of those, long out of the money calls is your worst option. It's your worst option. And better options are all at the money calls, debit spreads, selling put credit spreads, or going long in the futures market on ES or NQ or whatever you happen to be watching. That's all a better scenario. Mathematically, tactically, strategically, you would want to do that before going long out of the money calls. When is the best time to take calls? Technically, you want to take calls ideally right before the price goes in your favor and vol expands as well. But that's the struggle of being a trader, is getting lucky to get your position in right before you start to add delta, but basically before you're adding both intrinsic and extrinsic value, which is hard to do when you're going long calls. Remember, we're tracking all this, like the fact that we're calling out this as the dip level. It's all because of Spot Gamma. You can get 80% off. It's in the description of the video. And also Bookmap, they have a free tier, 60 month, 39 months, 79 a month, or you could do annual. That's exactly what we're doing here to see all the pending orders. So we see the pending orders for just buying and selling the underlying here on Bookmap. And then on Spot Gamma, that's where we're tracking all of the current live positions and the options flow. So options flow on the Mag 7, options flow on the S&P 500, and then the pending orders here. So two different tools that I use in conjunction to be together. So buy calls before positive Trump sweep. Yeah, I mean, obviously that would be an optimal situation. We are battling it out at the Spot Gamma implied one-day move low. They never tested the 770. They did a little bit of a front run here at 72. So it got really close. It got really close, actually. The next level would be 50. Oops, wrong. 50 would be the next level. And then 28 is the downside gap fill right here. So you're watching 70, 50, 28 in that order. And then that would be the bear case. The bull case is the bounce here or off of any of these levels, either back up to 800, 807, 825, something like that. It's called the Baron Trump strategy. Hey, you're not wrong. You're not wrong. All right, we clearly vomited out of the extended hours trading. We got that downside gap fill on NQ, but not on NDX. If that keeps going, I'd be looking at 25,000 flat. Maybe 25,050. I'm looking at this last little hiccup in this recovery. If it keeps going, you're watching 24,700 all the way down here. All right, how's the Orbo looking? All right, we did bounce all the way back up to the initial balance classic target, 25,230. We got that puke below. I didn't have the best exit. It wicked me out. I could have hit my target, but now we're bouncing all the way back up. I wonder if we're getting this initial balance, the south side rejection. The south side rejection. Whoa. Someone smashed that. All right. Whenever there's waterfalls like this, I think it's not the craziest thing to wait for the first pump to see how it is. We were pumping a little bit and it got hit. Even this, like,
Order submitted.
fuck. Did I bottom ticket? I was waiting to see if this waterfall continued. Oh, technically my risk should be up here above this cloud. I would rather make my risk though 34. So I'm doing a really quick fill, ideally only 10 points right here, just so I can move it to these wicks. I'm trying to be mindful of a potential additional bounce off of 200 and also on SPX bouncing off of 70. All right, we're de-risking a little bit. All right, I move my risk down. Come on, just get this fill. What is my max? Max would be 70. 75. All right. I was a little late to it, but I was kind of playing this initial balance rejection and then the waterfall. I was hoping there was a green bar in here that broke down. So my fill, like, I don't know.
Order filled.
All right. It's kind of working out in my favor anyway. If there's, I'm looking, as you guys probably can assume, I'm looking for 200 to take my risk off the table. It's a little too soon to move it, but if this wick pukes here, that's actually perfect because the high is my entry anyway. Do I just want to do it now? What's the 100 tick structure look like? I just want to take risk off the table. I just want it to be a freebie play. Fuck it. It's too soon. But should I do it? How high did this go? That went to 1950. So I'm definitely going break even if we touch 200. The question is can I kind of get lucky and front run it? That's a double fail. Fuck it. Freebie play. Freebie play. I don't care. I'm green. Freebie play. I'm front running Icarus. If it bounces, it bounces. Whatever. Fuck it. YOLO. YOLO, YOLO, YOLO. Big reward if it pukes. Yeah, that's exactly my thought process. And now I'm risking nothing. But I am trying to be mindful of this test right here. A bounce off of this. Because remember, it's this giant gamma level. We got to 92. Where did we bounce? We bounced to... I could move it down to 4. Do I just want to, maybe like before, just keep aggressively trailing it and most likely it'll knock me out, but maybe it hits my target. Oh, here we go. Shit, that was a big bounce off of 200. Yeah, this is what happens when like going short right above these key levels. You get those types of bounces, which don't necessarily make you feel the best. We'll see. Oh, I didn't mean to do that. I meant to do that. So no matter what, I'm making $60. So I'll make $350 on the day regardless, which is actually oddly enough where I was at before the whole fuck up anyway. So a very long, painful road to get back to exactly where I was. Shit.
Order filled.
Look at how that wasn't that bad. 345. And look at that. Dude, I swear, if you just do the exact opposite order of me, I was buying back. So if you sold right there, once again, you had a point of risk and it went your way. The only, like, I am the same power as Nancy Pelosi, just in the opposite direction. The exact same power, just in the polar opposite direction. Nancy Pelosi does something and it goes in her way. Matt Kohrs does something and it goes the exact opposite way. I am the yin to Nancy Pelosi's yang. That one I didn't want to be too degen with, just because we're getting close to a potential bounce zone. And yeah, maybe 50% chance it vomits through, but I didn't want to chance myself going back into the red after I had quite the arduous fight to get the fuck out of there. Yeah. Granted, I did some, this is all on me. This isn't even system or anything. Somehow I traded almost double the contracts I should have been, which is crazy. So this loss should have been like $1,000, and then these accounts had a fighting chance. And right here, I stopped on these ones early, and these ones were down these ones went from up 350 to down 2.5K, back to up 350. Craziness. Is this just going to fail again? Remember, the initial balance is all the way up here. Hey, Matt, what platform are you trading your personal accounts on? Public. Not a bad entry right here. 25. Pump. Hits the 50 EMA. Fails. The 1 minute even did it. Or no, hang on. Yeah, the 1 minute hit the 20 EMA. That's not a bad entry. You're in at 25. You're risking 37. You have 12 points of risk. Size it accordingly. Have at it. Is there a reason for this massive sell-off? Well, it's hard to answer that when it's not a massive sell-off. But right here, it pulled back up into the cloud. You're trading with trend, and it pukes out. I'm long on DJHE. What are your thoughts on the long-term investors? Are we fucked? I don't really have any thoughts, because I don't really understand what the business is. They haven't really made it evidently clear of what their core business is. So to do an analysis fundamentally of where it's going, they're attempting to make crypto dealings, but it's not really set in stone quite yet. So to me, that one as a long-term investment right now is just a giant question mark, because there's not much clarity. The platform itself, people think of it as True Social, which I wouldn't invest in that, because just Twitter's too popular. Right now, the popularity of X versus True Social is very evidently favoring X. But they are trying to expand the business and getting more into the world of crypto. And if they could pull that off properly, yeah, there's a lot of money there. But the key thing there is if they pull it off. That's a giant if. All right. If we reverse, I suppose we were watching this reversal here. VIX is still holding. Bitcoin is at 101. Mag 7 catching itself a little bit at 1107. SPY trending up ever since 1047. 5 minute, 10 minute, 30 minute, 4 hour bearish. 5 minute, 10 minute, 30 minute, 4 hour bearish. And ES has the downside gap fill, 93 down to 60. So another 30 points on ES, which is 30 points on SPX for the ES downside gap fill. And VIX is continuing to climb. It's above 19. It's above 19. Where are we at today? Jesus, this is falling apart real quick. SPX. SPY 671. Qs 610. We're almost there on the Qs. What is today? I'm trying to think of how can I protect. Oh, golly. Golly. Yeah, I'm just waiting and watching to see what the fuck goes on here. We did just make that low on the 1 minute. We're making this weird higher low. The question is, will it be able? I mean, it's kind of a tough zone because we're too low to chase it lower, but we haven't hit the level to really go long yet. We hit 71. We didn't hit 70. So yeah, you could technically count that as close, but like we're still bleeding down. It's just patience, folks. Patience, patience, patience. Could be a little bit of a triple bottom. This might be the first higher low. Kind of degenerate if you ask me. Mags, I don't know though. Mag 7 showing a little bit of life. S&P 500 showing a little bit of life. Is it going to hold, or is it just like, I mean, the VIX is still holding all the way up here. This is one of the biggest signs where you have to be careful because the VIX is not coming down. Even as price is seemingly settling, the VIX is just saying, hey, man, like when we move, we can move. It's just chilling at 19. 19. Well, you guys already know my levels. I'm watching 70, which is a huge level. It's this right here. If it doesn't hold, you're watching 50. If that doesn't hold, you're watching the downside gap fill at 28.81. That's the name of the game. That's what you're paying attention to. So we'll see. Maybe we have a midday recovery, but I think everyone should be mindful of the downside gap fill. Please be mindful. But to get there, it first means that this needs to get taken out at 770. So, folks, that's what I have for you. Shout out to Bookmap, pinned to the top of chat in the description of the video. Great way to, whoa, holy shit, look at that sell-off. Great way to see that type of action. And then also shout out to Spot Gamma. So those are the two tools that I use the most, and it's where I make my most informed decisions. So that's what I have for you. I'm going to go hang out in the Discord, see what all those cool cats and kittens are up to. Whatever you decide to do today, I wish you the best of luck. I hope you make a bunch of money. Remember, just stick to your system. Don't oversize. And when you're wrong, just admit you're wrong and move on to the next trade. We'll be posting some update videos later on tonight and streaming once again tomorrow morning. That's what I have for you today. I wish you the best of luck. Thanks for all the good vibes. Peace.